Hey guys, welcome back to another episode of 5 Minute Morning. Thanks for tuning in with me today on this Friday morning, if you're listening to it when we drop. I actually wanted to share this quick little episode with you as I just sat down with Anne Marie on CBS Morning News, and we were talking about something that's going on in the fitness world and how that applies to businesses and the stock market. And I thought, what a great conversation to share with you, because even if you are not an entrepreneur, which I know probably 95% of you are an entrepreneur. That's why you tune into the show of how to grow your revenue and create more freedom for yourself. But if you're not and you work out, I'm so interested to know if this is something that you're dealing with right now and if you are shifting the way that you work out. So let's unpack a little bit of this story and let's go back 3 years ago in order to do so. As we know, 3 years ago during COVID, it was the pinnacle peak of the at-home fitness revolution. That is why Peloton and stocks like it were soaring at all-time highs of nearly $171 a share in early 2021 because of the pent-up demand, and in so many states, gyms were closed. Today marks a different story. Shares of Peloton have plummeted 98%, bringing the stock down to under $5 a share at the time of this recording. So what has happened at Peloton and how can you learn from this for your own business? Well, I see so often that businesses that experienced growth during the pandemic, Peloton being an example of that, soared revenue, and they are chasing that revenue as if they can ever obtain it again. That restriction that Peloton experienced, how gyms were not allowed to be open and everyone had to work out, whether it was Peloton or Life Fitness or Dick's Sporting Goods, all of these other companies that saw major surges as people tried to work out at home, they are not going to have another moment in history, most likely, that is ever going to duplicate that environment. So even though they became one of the premier home gym companies and sales were through the roof, they need to find a way to navigate this new norm. And actually, it's more like the norm that they had pre-pandemic. Fast forward to today, in a post-pandemic world, Peloton reported a decrease of just over $750 million, which resulted in another 4% loss in the third quarter of 2024. Now, the reality is this decline is really showing a broader shift in the fitness industry. Not only do we not have the same conditions that we had during COVID, but it's also a shift in the fitness industry. And a lot of industries are like this, right? We see this in fashion, we see this in beauty industries, where consumers all of a sudden shift their buying behaviors, and whatever they were doing for a really long period of time, they now want to do something different. We also see this in jewelry and so many other, I'm sure there's a lot of guy industries that we see this too. Nothing is coming to mind currently. If you're a guy and you're thinking of something, you could probably see how this shifts from time to time. The fitness industry is no different. At some point, people are really focused on cardio type workouts. And then all of a sudden we get some new data that shows that strength training is more beneficial and everybody wants to shift and do more of that. Now, we know for a fact more muscle will burn more calories. And as we have more and more people aging in our country, everyone is really shifting to this focus of weightlifting so they can build more muscle, which they know is going to burn more calories. And we know that if we can burn more calories, we can eat more, which is, I think, what everybody's goal really is. But this shift really had a profound impact on the market for at-home fitness equipment. As we've seen this significant decline in people wanting the home virtual workouts and people wanting more body and weight training, the change in the market has come as well. Now, last week on the show, we talked about how Starbucks was over-innovating, causing a loss in focus and connection with their customers and really getting away from their primary value that they deliver. This week, we've got the complete opposite happening with Peloton. They did not innovate fast enough. When you look at their website, you're going to notice it's the same stuff, same treadmills, same bikes, same online classes, same everything. Not much has changed since 2021, although the landscape has changed drastically. And when we look at these two giant companies, we can see why business is really difficult. It's complex. This is why 91% of all businesses fail. It's what I talk about in my book, The 9% Edge. We have such dynamic shifts in the market. It doesn't matter if it is your specific industry or not. We can learn so much. And when you think of innovation, What comes to mind? I mean, often I see entrepreneurs thinking that it means a whole new revenue vertical or reinventing something like a completely different product, which is what we saw Starbucks do. But innovation extends far beyond a product that sits on a shelf or a service that's in your offerings. Most entrepreneurs are better operators than innovators, which is why most founders can really succeed by optimizing existing core products and offerings rather than spending the time and focus to create something new. And by doing so, you can get a substantial edge from others in your market. Not to mention generate more profit at a rate of 2.5 times higher than what it would be if you took the time to create a new vertical of revenue or spending your time and focus to innovate something completely new. It is commonly more efficient to double down and innovate in a new way to deliver your products, your services, or to systematize or optimize your processes. And remember that successful innovation has historically occurred at the intersection of 3 things. The 3 most important elements of innovation is remembering the who, the what, and the how. The who is the unmet need of your customer. Who is your customer and what problem do they need you to solve? The what is the solution. What is the solution that is compelling enough that you can execute with excellence to solve that problem? And 3 is the how. This is your business model for that solution and how you can monetize it. How will the solution create value in their life? And what is the business model that you have to deliver? So my question is to you today, who, what, and how will you deploy innovation in your business to become part of the 9% who succeed? Let me know in the comments below. And if you found value in this episode, please share it with someone who needs to hear it. And as always, we all would be honored if you left us a 5-star review over on Apple Podcasts. And if you want more content like this delivered directly to your inbox, sign up for our brand new newsletter, where we are sharing up-to-date business and finance topics that apply to you and your business. You can sign up for The Edge by going to candyvalentino.com/newsletter. That's all for today's episode. Thanks so much for tuning in with me and spending this time today. We'll see you next time.